Hey there, fellow knowledge seekers. Ready to dive deep? Today it's all about compounding. And you know what? It's way more than just watching your money grow.
You got that right. It's these same principles, the ones that make your investments snowball over time. They can totally transform how you think your relationships, even your health.
Okay, so we've been really getting into this book, The Joys of Compounding by Gautam Baid. And let me tell you, this book is seriously packed with wisdom. It's like a guidebook to leveling up your life.
And what I find so cool is that Baid makes it clear. Compounding. It's for everyone. It's not some secret formula or anything. It's all about putting in the effort consistently and having that long-term mindset.
I love that. So the book kicks off talking about becoming a learning machine. And to get this, it features two of the biggest names in investing, Warren Buffett and Charlie Munger. They spend something like 80% of their day just reading and thinking.
It's true. They're constantly saying that they see themselves as students, always wanting to learn more, always refining how they see the world.
That's seriously inspiring. It reminds me that, learning never really stops. And the more we know, the better decisions we make, not just with money, but like in all parts of life.
Exactly. And speaking of making smart decisions, the book goes into Charlie Munger's idea of worldly wisdom. It's all about using knowledge from everywhere, history, psychology, physics, all of it, to build this really strong way of understanding the world.
So it's like building this mental framework, right? Where each new bit of knowledge makes the whole thing stronger.
Exactly. And this way of thinking, drawing on all these different fields, it's especially powerful when it comes to investing. It helps you see chances and risks that other people might miss because you're not stuck in just one way of looking at things.
Gotcha. So we've got the learning machine and worldly wisdom. Now here's where things get really interesting. Passion and focus. Baid shares a story from his own investing journey about his bet on HHA. It's a graphite electrode company in India.
The really interesting part is that Baid saw this huge chance because there weren't enough graphite electrodes. He'd done his research, he knew the company had potential, and he was willing to take a risk, of course, a calculated one.
And it paid off big time.
Yeah.
But the book also warns us, don't chase those quick wins. Don't give up too soon. It highlights the danger of what Baid calls compounding in reverse.
That's just a really good analogy, like how consistent wins can lead to massive growth. Well, consistent losses can just eat away at your capital. It shows how important patience and discipline are and that long-term vision.
So true. It's like that saying from Warren Buffett, someone's sitting in the shade today because someone planted a tree a long time ago.
Oh, yeah.
Okay, now this next part might seem a little counterintuitive, but the book actually talks about the power of doing nothing in investing.
Yeah. This is one of the most powerful ideas in the book. It's about resisting that urge to always be fiddling with your portfolio, especially when emotions are running high.
It's like people trying to time the market, which is so hard to do even if you're a pro. The book suggests that we're often better off just riding out those ups and downs in the market and believing in the power of long-term compounding.
Exactly. It's about being confident in the investments you've chosen, even when the market gets a bit shaky. Like surfing, you got to stay calm and ride the wave.
Okay, so we're learning to surf, not fight the waves. Which brings us to another important idea: financial independence and character. The book says that reaching financial independence isn't just about the money itself. It's about the freedom it gives you to live life how you want.
And it talks about Charlie Munger's own journey, which is a great example. He started with hard work and saving, then slowly built wealth through disciplined investing. It's like a real-life example of compounding in action.
It's inspiring how Munger and Buffett, even with all their wealth, are known for being modest and ethical. They genuinely seem to care about their shareholders and the companies they invest in.
Absolutely. And their ethical approach has actually been a big part of their success. It shows that integrity and doing well financially, they can go together.
Really well, in fact.
All right, so let's get into a practical tool from the book. Warren Buffett's $1 test. It's a really clever way to figure out if a company is actually creating value for its shareholders.
The test itself is pretty simple. You compare how much the company's market value has increased to how much its retained earnings have increased. Basically, you're trying to see if they're using the money they're keeping to actually generate good returns for investors.
So it's like asking, for every dollar the company held onto, did they create at least another dollar in market value? It cuts through all the noise and shows if they're actually doing what they say they are.
Exactly. The $1 test helps you see if they're really using your investment wisely.
So the $1 test helps us see if a company is using our money well. But what about the market as a whole? Is it always logical and predictable? Well, the book tackles this big question about how efficient the market really is. It says that, for the most part, markets are efficient, meaning Prices generally reflect the information that's out there. But there are times when emotions like fear or greed, they push prices away from what they're really worth. That's where the smart investors can find opportunities.
Ah, so emotions can create these inefficiencies in the market, and that's where the chances are. But how do we protect ourselves from those emotional swings and avoid making bad decisions? That's where the margin of safety comes in, right?
Now, a margin of safety means buying assets for a lot less than they're really worth. It's like a cushion that protects you from the inevitable ups and downs of the market. Think of it as a safety net for your investments.
That margin of safety sounds like something every investor needs. Now, the book brings up this really cool mental model called Bayesian thinking. It's a powerful way to update what you believe as new information comes in.
It's about being adaptable in your thinking, not getting stuck in old ways of seeing things. You start with a belief based on what you know, but you're ready to change that belief if you get new evidence. The book gives examples of how this can be used in investing, helping you move on from the past and see when things have really changed, for better or worse.
So it's about being flexible in our thinking and not being afraid to change our minds when we need to.
Exactly. It's a great way to avoid being stubborn or only looking for information that confirms what we already think.
So we've covered a lot: becoming learning machines, embracing worldly wisdom, the power of passion and focus, patience and discipline, financial independence and character, even practical tools like the $1 test and margin of safety. But there's still so much more to explore.
Absolutely. In part 2, we'll dig deeper into managing a portfolio, market cycles, those black swan events, and even the role of luck in investing. Stay tuned for even more insights from the joys of compounding. So we've been talking about some really powerful concepts from the joys of compounding, but let's shift gears a bit and talk about something more practical, like managing your portfolio.
Yeah, I think that's a good idea. I mean, a lot of people I know, myself included, could definitely use some advice on how to actually build and manage a portfolio well.
Well, you're in for a treat because Baid has some really insightful advice in this book. And he starts by kind of shaking up what people usually think about diversification.
You mean like the idea that you should spread your money across a ton of different stocks?
Exactly. Baid says that real diversification isn't just about owning a bunch of random assets. It's more about owning things that react differently to the same events.
So it's not just about buying stocks from different industries, but understanding how those industries are connected and how they might react to, different economic situations or even unexpected events.
Exactly. Like during a recession, some industries might struggle while others do really well. A truly diversified portfolio would have assets that could kind of soften the blow if things go south.
That makes a lot of sense. Now, the book also has this interesting take on how many stocks we should own. Baid actually suggests that for most people, owning more than 20 stocks might be a sign of financial incompetence. What do you think about that?
It's definitely a bold statement, but there's some logic behind it. The idea is that if you own too many stocks, it becomes really hard to actually understand each of your investments and keep up with all the news and changes.
So it's about quality over quantity, focusing on a smaller number of companies that you really believe in and know well.
Right. It's about having the confidence to focus your investments in companies that you've researched thoroughly and that match your investment philosophy.
Okay, I like that. Now let's talk about something that can make even experienced investors nervous. Market cycles. They can be unpredictable and volatile and sometimes pretty scary.
That's for sure. But the book reminds us that market cycles are just a normal part of investing. It's like the tide going in and out. The key is to understand these cycles and not freak out when things inevitably get a little rough.
That's easier said than done, though, right?
Yeah.
Especially when you see your portfolio losing value. How do we actually deal with those tough times without making rash decisions?
The book emphasizes staying focused on the long term and sticking to your strategy. It's about remembering that fear and greed can make people act irrationally. And the ones who can stay calm and rational during those downturns, those are often the ones who come out ahead in the end.
So it's about having the discipline to ride out those storms and trust that the market will eventually recover.
Exactly. And speaking of things we can't really control, the book also talks about something that's often overlooked in investing: luck.
Luck.
Yeah.
So you're saying sometimes it's not just about skill and making good choices, but about being in the right place at the right time.
Absolutely. The book acknowledges that luck can be a big factor in both success and failure, especially in the short term. Sometimes even the best investors can make a great decision that doesn't work out because of things they can't control.
That's true. But how do we know the difference between luck and skill? How do we know if our success is because of what we did or just good fortune?
That's a great question. The book suggests that over the long term, skill usually wins out. Consistent, disciplined investors who have a good process are more likely to succeed, even if they have some setbacks along the way.
So stick to your plan, believe in your skills, and don't get too discouraged when luck isn't on your side. Okay, let's talk about something that can really shake things up, those rare and unpredictable events that can have a huge impact on the markets. Black swan events.
Yeah, these black swan events like the 2008 financial crisis or the pandemic, they seem to come out of nowhere and totally change everything we thought we knew.
So how do we prepare for something unexpected when we don't even know what to expect?
That's the tricky part, right? The book says don't even try to predict these black swan events because they're impossible to predict. Instead, focus on building a portfolio that can handle different kinds of shocks and stresses.
So it's like having a margin of safety, not just for individual stocks, but for the whole portfolio.
Exactly. It's about diversifying in a smart way. Not just different types of assets, but also thinking about the different risks you're exposed to. For example, you might not want to put all your money in companies that are all heavily dependent on one specific region or one industry.
It's about thinking about the what ifs and making sure your portfolio can handle different kinds of challenges. So we've talked about a lot in this part, from diversification to market cycles, luck, black swan events. What's next on our deep dive into the joys of compounding?
Well, in part 3, we'll get into some powerful tools for decision-making, like the importance of learning from history, the idea of opportunity cost, the power of seeing patterns, and even more about that fascinating Bayesian thinking. Get ready to level up your decision-making skills.
All right, so we've been uncovering some amazing insights from the joys of compounding, from building that learning machine mindset to navigating those market cycles and really embracing the unexpected.
Yeah, it's been quite the journey, and we're not done yet. In this final part, we're going to explore some seriously powerful decision-making tools, things that can help you make smarter choices, not just when it comes to investing, but in every part of your life.
Okay, I'm ready. I think everyone can always get better at making decisions.
Exactly. And the book starts off by highlighting the importance of studying history.
History? What does history have to do with making good decisions now?
Well, Warren Buffett has this famous quote, "Read more history and fewer forecasts." The idea is that by understanding the past, we can learn so much about human behavior, market trends. You know how things tend to go in cycles. This knowledge can help us make better choices today.
So it's kind of like learning from the mistakes and successes of people who came before us, seeing how history often repeats itself, or at least rhymes.
Exactly. The book also talks about how risky it is to rely too much on forecasts. They're often wrong, especially with something as complex as the financial markets.
Yeah, I see what you mean. Forecasts can be tempting, but they can also lead you astray, especially if they're based on overly optimistic assumptions or, they don't take into account those unexpected events.
Right. The book encourages us to develop our own judgment based on a solid understanding of historical trends, those fundamental principles, and a healthy dose of skepticism.
That makes a lot of sense.
Yeah.
And the book brought up this idea that I found really interesting. Opportunity cost.
Yeah.
Can you explain what that is and why it's so important for decision making?
Sure. Opportunity cost is basically the idea that every time we make a decision, we're also choosing not to do something else. It's about understanding that there's always a trade-off, and if we look at what we might be missing out on by making a certain choice, we can make smarter, more strategic decisions.
So it's not just about the potential good that comes from a decision, but also thinking about what we might be giving up by choosing that path.
Exactly. The book uses examples from the world of investing to explain this, like choosing to hold on to cash instead of putting it into a certain stock or the other way around. By thinking about the opportunity cost of holding on to that cash, we might be more likely to invest if we believe the potential gains are greater than the risks.
That's a really clear way to think about it. Okay, so let's shift gears and talk about something that can give investors a real edge. Recognizing patterns. The book suggests that if we can spot and analyze recurring patterns in the markets and in business, we can actually anticipate future trends and make more profitable decisions.
Yeah. Recognizing patterns is a valuable skill, but it takes careful observation, critical thinking, and the ability to see the connections between things that might seem unrelated. The book gives examples of how successful investors like Warren Buffett have used this to find undervalued companies, figure out changes in what people want to buy, and take advantage of opportunities in the market.
So it's like seeing the big picture and how all the different pieces fit together.
Exactly. It's about having a keen eye for those details, a deep understanding of cause and effect, and the willingness to challenge conventional wisdom.
Now let's go back to a mental model we talked about before, Bayesian thinking. Can you remind us what that is and how it can help us make better decisions?
Sure, Bayesian thinking is all about updating what you believe as you get new information. Think of it as a constant learning process. You begin with an idea based on what you already know and have experienced, but you're open to changing that idea as you get more evidence. The book shows how this can be applied to investing, helping you avoid being stuck in old ways of thinking and recognizing when things have actually changed for good or for bad.
So it's about being flexible in our thinking and not being afraid to change our minds when the facts change, right?
Right. It's a powerful way to counter being stuck in your ways and only looking for information that agrees with what you already think.
Throughout the book, there's this strong emphasis on developing good character. Can you talk a bit more about that?
Absolutely. The book makes the case that integrity, honesty, and ethical behavior are crucial for success in the long run, both in investing and in life. It highlights how having strong morals can actually lead to better results over time because they build trust, credibility, and a reputation for being fair.
So it's not just about making as much money as possible, but about doing business in a way that reflects your values and benefits everyone involved.
Exactly. It's about thinking long-term, understanding that your actions have consequences, and trying to make a positive difference in the world.
Well put. This deep dive into the joys of compounding has been incredibly insightful. It's given me a lot to think about and definitely things to apply in my own life.
Me too. This book goes way beyond the technical stuff about investing. It gets into personal growth, ethical decision-making, and having a lifelong love of learning. It reminds us that compounding isn't just about money, it's about growth in all its forms.
You got it. It's about becoming better thinkers, better investors, and better people. So to all our listeners out there, if you're looking for a book that will challenge you to think differently, inspire you to reach your full potential, and guide you toward a richer life in every way, I highly recommend The Joys of Compounding.
It's a must-read for anyone who wants to unlock the power of compounding in all aspects of their lives.
And that wraps up our deep dive into the joys of compounding. We hope you've enjoyed the journey and picked up some valuable insights along the way. Until next time, keep learning, keep growing, and keep compounding.